Hello everyone, welcome to Avyukti Learning. So today we are going to continue with our chapter 1, Introduction to Accounting. So far we have seen the meaning of accounting. Accounting is a systematic process of identifying, measuring, recording, classifying, summarizing, interpreting and communicating financial information. And then we saw what are the attributes of accounting or process of accounting. And then we saw whether accounting is an art or a science. And then we saw branches of accounting. So there are three branches of accounting. First is financial accounting, second is cost accounting, third is management accounting. Then we saw the meaning of bookkeeping. So often people will interchange the word bookkeeping and accounting, but both are not same. Bookkeeping is a narrow term, whereas accounting is a broader term. So account bookkeeping is part of accounting. So bookkeeping involves identifying financial transactions, measuring them in terms of money, recording the financial transactions and events, and classifying the recorded transactions and events. So this is bookkeeping. And then we saw difference between bookkeeping and accounting. And then we saw the meaning of accountancy. Accountancy is a knowledge, whereas accounting is the action or process. So accountancy, uh, inside accountancy there is accounting. So accountancy gives knowledge how to do accounting, and we will do the process of accounting using that knowledge. And then we saw the objectives of accounting. uh, we saw six objectives of accounting, like recording financial transactions and events, determining profit or loss, determine financial position, assisting the management, communicating accounting information to users, and protecting business assets. So these are six objectives of accounting. Next, we saw advantages of accounting. So totally there are six advantages of accounting. The first one is it gives financial information about business, that is profit earned or loss incurred. It gives assistance to management. And third is facilitates comparative studies, like current year's financial statements can be compared with previous year's financial statements, and we can locate what are the significant changes happened. And then the fourth advantage is financial statement accounting information facilitates settlement of tax liabilities, it facilitates loan, and it acts as an evidence in court. So these are the advantages of accounting and limitations of accounting. Accounting is not fully exact. So most of the calculations are done based on estimation in accounting. So for example, useful life of asset. So useful life of asset, what we will do is we cannot find out actual useful life of asset. What we will do is we will do an estimate. We can find only the estimated useful life of asset. So always estimation and actual will have huge difference. So whatever calculations we are doing based on estimates will not be 100% accurate. So only they are telling that accounting is not fully exact. And one of the good example is providing depreciation on the basis of estimated useful life of an asset. So the estimated useful life and actual useful life will be different. For example, actual useful life will be greater, more than estimated life, or less than estimated life, that we don't know. So estimations are always not 100% accurate. The second limitation is accounting does not indicate the realizable value. Realizable value means if I sell the asset, whatever I have, if I sell that asset in market, how much amount I could recover, that is realizable value. So that we will not record while we are preparing the financial statements. So for few assets, we will get some scrap value, some recovered amount we will get, but and for a few assets we will not get any amount from the market, and some we cannot sell itself. And the third limitation is accounting ignores qualitative aspect. So it records only financial aspects of all the transactions. It involves only monetary matters. It will not include any qualitative elements like quality of staff, industrial relation, public relation, etc. Fourth is accounting ignores the effect of price level changes. Accounting statements are prepared at historical cost, not on the price level changes. Price level changes means, so I have given a example here. I said in the previous video itself, if you buy the asset on a particular date, we will record that amount only in the financial statements, in the accounting. We will not change the amount when the value of furniture increases or decreases. We will not change that. We will not give effect of that change in our financial statement. Whatever amount we bought, we will record only that in our financial statements. And the last is accounting may lead to window dressing. Window dressing means manipulation of accounts. So often companies will conceal some facts to show uh, that their financial position is better than what it actually is. So these are limitations limitations of accounting. So I hope you got clarity till this topic. So today we are going to see accounting information. Accounting information and types of accounting information. Accounting information. Accounting begins with identification of transactions of financial nature and ends with the preparation of financial statements. As we read before, accounting starts with identification of all the transactions which are of financial nature, and with that, what we will do, we will prepare financial statements. So, financial statements are profit and loss, balance sheet, all those are financial statements. Second step, second point is each step in the process of accounting generates information. So each and every step in accounts gives some information so that we could proceed to the next step. So for example, if we are identifying the financial transactions and events, what we will do, we will prepare, we will measure them in monetary terms, and then we will record them in journal. From journal, we will post to ledger. From the ledger, we will prepare trial balance, and from trial balance, we will prepare financial statement. So each and every step gives some information so that we could move forward. We can go one step ahead and we can prepare another statement using that information. After preparing that statement, we will get some information from that. With that, we could proceed, and it will at last it will be used for making some vital decisions. Generation of information is not an end in itself. It is a way to facilitate the communication of information to users of accounting information. After generating information, we should not have it with ourselves. What we should do, we should communicate those information to the users of accounting statements or financial statements, so that everyone can take decisions on their own terms. So that is all about accounting information. Now comes the topic types of accounting information. Accounting information refers to the financial statements generated through the process of bookkeeping, use of which helps the users to arrive at decisions. So, accounting information are financial statements. So, after the process of bookkeeping, after doing all the process in accounting, what we will arrive is we will get our at last we will prepare our financial statements. So, there are five financial statements. So one is trading profit and loss account. That is the first financial statement. The second is balance sheet. The third is cash flow statement, and the fourth one is notes to accounts, and the fifth one is statement of changes in equity. Statement of changes in equity. So these are the five statements what we prepare. The information made available by these statements can be categorized into the following: information relating to profit or surplus, information relating to financial position, information about cash flow. So the first information relating to profit or surplus, it is given by profit and loss account. Information relating to financial position, balance sheet will give the second information, and third information about cash flow. Cash flow statement will give the third information. So guys, profit and surplus both are similar terms, but we will the usage will differ. For example, we have many companies, when many organizations surrounded by us. So there are profit making organizations and there are non-profit organization. So profit making organizations, their what is their desired objective? Their desired objective is to earn more and more profit and to grow their business. So that is the main objective of profit making organization. While we have many non-profit organization around us, what they will do is uh, their main aim is not to make profit. So what is their main objective is, the main objective is to the main objective is to serve the public or a community, or they used to they'll what they do is they do activities which uh, which has some social cause. It is done for the welfare of public in general. So that is the main objective of non-profit organization. So examples are charities, self-help organizations, sports association, environmental groups. All these are non-profit organization. So their main objective is not to earn profit, but to do some charitable activities and improve the welfare of society. So the term profit is used for profit making organization, and the term surplus is used for non-profit organization. This is the basic difference between both the terms where we will use. So profit making organization will not use the term surplus, they will use profit. Non-profit organization will use the term surplus. So remember this. The first one, information relating to profit or surplus. The income statement makes available the accounting information about profit earned or loss incurred as a result of business operations or otherwise during accounting period. So income statement is nothing but trading profit and loss account. So from trading profit and loss account will only we will come to know about the profit earned or loss incurred by the particular organization. That is business operations mean whatever business they are doing. So for that accounting period is nothing but the financial year. Financial year starts from 1st April of this year and ends at 31st March of the next year. That is our financial year. So a firm prepares trading account which provides information about gross profit or gross loss, profit and loss account which provides net profit or net loss. So the first statement what we do is trading account. Trading account, from trading account we will find our gross profit or gross loss, and after with that what we will do, we will prepare profit and loss account. Profit and loss account shows our net profit or net loss. So first we will prepare trading account and then we will prepare profit and loss account. Trading account is mostly prepared by manufacturing companies. All those we will read in our last chapters. We will prepare this financial statements only. And a not for profit organization prepares income and expenditure account instead of profit and loss account, as it carries on welfare or charitable activities and not business. So this one, guys, not for profit organization will not prepare profit and loss account. Instead they will prepare income and expenditure account. Income and expenditure account. After preparing income and expenditure account, we will arrive whether the not-for-profit organization earned surplus or there is any deficit. So deficit is nothing but loss, but the terms here what we will use is surplus and deficit, and the account what we prepare is income and expenditure account. That is for not-for-profit organization. So it provides information about surplus, excess of income over expenditure, deficit when excess of expenditure over income. When expenditure is more than income, it is deficit, and when income is more than expenditure, that is surplus. So I hope this topic is clear for you. The next is information relating to financial position. The position statement. So balance sheet and position statement are same. The another word for balance sheet is position statement. Position statement, that is the balance sheet, makes available the information about financial position of the entity. So from balance sheet only we can know the financial position of the entity. The difference between assets and liabilities is known as capital. Capital means amount due to owners. So the meaning of capital we will see in the next chapter, terms of accounting. Uh, Capital means nothing. See, for example, there is a person A. He starts business with rupees 1 lakh. So this 1 lakh is known as capital. So capital means amount due to owners. Why they are saying amount due to owners means the company and the owner of company are treated as different persons. So only uh, in this case they are imagining like this: the owner has given loan to the company. The company should earn profit and it should give back his capital invested by the owner to him. So that is what they are. So only they are telling that capital means amount due to owners. So the meaning of capital we will see in detail in the next chapter. So in not-for-profit organization, difference between assets and liabilities is termed as capital fund. So for profit-making organization, the difference between assets and liabilities are known as capital only. In not-for-profit organization, the difference between assets and liabilities is termed as capital fund. So guys, whatever the terms which we are using in profit organization will not be mostly used for non-profit organization. They will have their own terms in accounting. So we will be reading the terms of accounting for non-profit organization in NPO chapter. So this is all about information relating to financial position. And the last is information about cash flow. So in cash flow, what we will do is we will prepare a cash flow statement which includes only inflow of cash and outflow of cash, so that we can see how much surplus cash we have, or else if there is any shortfall in cash we can find that. Cash flow statement is a statement that shows both inflow and outflow of cash during a specific period. It is of immense use as many decisions such as payment of liabilities, payment of dividends, and expansion of business, etc., are based on availability of cash. So, guys, we will plan to expand our business only if we have surplus cash in our hands. If we have no cash, we cannot expand business, or if we have uh, less amount of cash, we cannot expand our business. So we should always keep a track of how much cash we are having at last in our hand. So only they will prepare a separate statement called as cash flow statement. So it shows both inflow of cash and outflow of cash. So with inflow of cash we can see from inflow of cash we can find out from what resources we can generate cash, and outflow of cash where we are spending more, where cash is spent more, so that we can find. And at last with the availability of cash we can make certain decisions like payment of liabilities are, for example, payment to be made to creditors, that is our liability. Payment to bank, that is our liability. And payment of dividends, if our company has shares and we need to pay dividends to the shareholders, so that is payment of dividends. And expansion of business is to grow our business operations. So all these are decided based on availability of cash. So this is our third information. So yes guys, I hope this topic is clear for you. And then we have one last topic which we will do in the next video, that is uses of accounting information. So that is divided into two. One is internal uses and external uses. With this topic, our chapter ends, and then we will start with the second chapter, terms of accounting. So in the second chapter, we will see different terms which are used in accounting subject. So I hope everything is clear till the topic which we saw today. If there are any doubts, please post it in comment section, and please subscribe the YouTube channel, like and share. Thank you so much.